Good morning, everybody. This is the live market open for Tuesday, January 5th, 2016. Yes, it's a new year. I'm Yohay Elam of Forex Crunch and Market Movers podcast, doing the show as every morning for FX3. As usual, today we'll cover recent developments in markets, charts and levels, the next 24 hours, and of course, your questions. If you can't see the chat box under the video, please go to the address on the screen, tlk.io/fx3-forex-live-video. So what do we have in general in markets? Well, some instability to begin the new year. That means Chinese stock market crashed and carried away a few other stock markets, and this had also an impact on currencies. So what am I talking about? Let's look at the charts. We had sort of a risk-off atmosphere, which favors safe haven currencies and hurt commodity currencies and the pound. So, and this thing began changing yesterday. What does this mean? That means that the safe haven currencies, the euro and the yen, began weakening against the US dollar, while other currencies did stabilize and even make gains. So in the case of euro dollar, we're back down to support, okay, at 108. Fell down yesterday. We had an initial rise towards 110. We never really got there. Anyway, we got close to 109.50, which is a resistance. Now we're close to support at 108. Resistance awaits at 108.80 and further support at 107.60. Now, the euro also had other reasons to fall. The main one is that German inflation, it missed. We had the figures sort of released during the European morning yesterday, and then the final one at noon, and we had it fall, it rise. The prices rose in Germany only 0.2 year over year, less than 0.3 last month, less than 0.4 expected. And this is, of course, also a bad sign, an ominous sign for the inflation figures that we have today, this morning, which is the main event for this morning. So the euro had reasons to fall on its own, but also sort of some stability in markets also pushed the pair lower. The stability in markets helped dollar yen recover. Okay, we had a dip yesterday towards 118.70, and now we're on higher ground. 119.36, still under 120, the round and important level. So it's not all clear. So far, there are still worries about China. According to reports, China is injecting money to support the local currency, the yuan, and to support stock markets. And they're also considering extending the ban on short selling. This, of course, has impact on other markets and on currencies. But at the moment, it's a bit more stable. So we have the yen weakening just a bit. Remember, in times of trouble, the yen and also the euro are sought after. Okay, and other currencies, well, pound, can't say it did really recover. Maybe this is, but it sort of it's above the lows. Okay, it's above 147. It already reached much lower ground there, almost 146.60, right? So 147.12, still low ground. The pound is still suffering. It had good reasons to suffer as well. Yesterday we had UK manufacturing PMI came out below expectations at 51.9 points. The manufacturing sector in the UK, like in the United States, like in other countries, like in China, what began the trigger for the stock market crash yesterday was that manufacturing is slowing down. Okay, so today we'll also have figures from the UK. Let's talk about other currency pairs. Dollar CAD. Okay, relative stability here. We had the pair moving higher towards 140, but oil prices did find some kind of a bottom, at least temporary. Okay, why did they find the bottom? Because the tension between Saudi Arabia and Iran lifted oil prices. Of course, there's always danger that supply will be hurt. I think this was a bit exaggerated. Yeah, yesterday on Sunday we had, on Saturday we had the execution of the Shiite clerk in Saudi Arabia, then the violent protests in Tehran, and then the expulsion and the severance of worsening of diplomatic ties between Saudi Arabia and also Bahrain and also other countries against Iran. So this sort of supported oil prices. This allowed the Canadian dollar to stay away from 140, okay? But it doesn't, the problem with oil is not solved, okay? Now the Canadian dollar is strengthening a bit more because of, well, this sort of risk-on atmosphere, this improved sentiment. But remember, the problem with the oil supply has not been solved. There's still too much oil coming out. Iran is still expected to come back online. Inventories are still filling up, and the Canadian dollar, I see it still as vulnerable. Anyway, we're in a wide range between 137.87 to 140, currently just above 139. Aussie dollar suffered yesterday, of course, because of China, and now managed to recover. Look at this very nice technical behavior here. Support at 71.50, resistance 72.20, and some more further resistance 72.80 and 73.60. Further support at 70.60. Okay, but the Australian dollar, with the better sentiment, with the stability in the Chinese stock market, is looking better. All right. Kiwi dollar, also here we're above already lower ground, staying away from support at 67. 67.90 is resistance. But the bigger test for the Kiwi comes today. Okay, let's talk about more dollar Swiss. Okay, with the weakening of the euro, of course, dollar Swiss, if you want to see what's going on there, you have to look at a currency which isn't there, the euro, because of the intervention of the S&B to support euro Swiss, to weaken the franc. So we're now at 1.40 pips, almost above parity. We're seeing the pair move higher. Parity is, of course, some kind of support, but not that strong. I would say 1.50 is stronger support resistance over there. But of course, the pair to look at is Euro Swiss. In this context, 107.60 seems to be a line that the S&B defends, and usually we're at the middle of the range, 108.50. Morning, everybody. Euro pound, we had it strengthened because of the crash of the pound and the appeal of the euro as a safe haven, but now it's sort of off the boil. 73.50, 74.10 is resistance. I would say that 73 is support. Okay, euro pound continued its fall because of the weakening of the euro. We had a dip under 129 yesterday. Let's put, I think this line is a bit meaningless at the moment. Yeah, so 128.70, I would say support. Currently at 129, weakness of the euro and relative stability of the yen. Pound yen, we're at the same level seen yesterday, but we were already on lower ground. 175.55 is the current level. Of course, the appeal of the safe haven yen and the crash of the pound. Now we're seeing some kind of change, because the pound is a bit finding some support, and the yen is less attractive at the moment. Remember, this atmosphere, we haven't changed from total pessimism to optimism, but it's just some kind of correction, less pessimism, I would call it this way. Comment here from Jax: nothing worse than losing internet connection after a place the trade before you can place it. Oh yeah, that's bad. Yeah, I guess the key for a successful Forex trading is a stable internet connection, stable electricity. Sorry to hear that. I hope it doesn't happen too often. Okay, I think we've covered major currency pairs. Let's take a quick look also at oil. I think we mentioned this yesterday. 34.25 was the low line so far. We're higher than that. We were 37.80, some kind of resistance. It was the low in August. I'm talking, of course, about WTI crude oil, not Brent, but not going anywhere fast. Once tensions subside in the Middle East, and we have the new inventories figure, for instance, tomorrow, and the reality is that there's too much supply, not enough demand in oil. Okay, so, and this is the S&P. Just to take a quick look on what happened yesterday. Also, we had a big fall to the lowest level seen since October. But now I think now we're on higher ground with the S&P. I mean, we had some kind of recovery over there. This sort of, together with the recovery in the Chinese stock market, allows sort of a pause in pessimism and some kind of recovery. Okay, let's look at the events we have today. All right. So we have Spanish employment change. Actually, it was already released. Let's look at that. Let's refresh here. Why don't I have that on the screen? Oh, for some reason I don't have it. Anyway, perhaps more importantly, German unemployment at just after the show ends at 5 minutes to 9 GMT. Expectations are for no, we don't have expectations for some reason, but we had a drop of 13K last month. All in all, the unemployment situation in Germany still looks good. The unemployment rate is at 6.3. If you look at the chart here, you see a gradual fall in unemployment. More of the same is expected. Germany is still doing well, despite well, the old continent has shown some signs of recovery, and Germany usually takes the lead. Okay. Okay, we have the Spanish. Well, I have only the final figures for 2015. Unemployment in Spain dropped by 354,000 people, which is good news, but the unemployment rate is still above 20% here in Spain, the fourth largest economy in the Eurozone. Okay. Anyway, and this regarding Germany, where this can have an impact on the euro. But a more important event is the inflation figures. The flash CPI for December, this is preliminary, but usually these figures don't change too much. Okay, so the headline figure, officially we're expecting a rise, okay? We're expecting a rise from 0.2 seen last month, the final figure for November, to 0.4 this time. But given the German numbers and also the Spanish numbers late last week or early this week, anyway, I don't think we'll have this. I think we'll have a disappointment. Probably part of it is priced in, but I'm not sure all of it is priced in. We might see more falls in euro dollar because of a weak inflation figure, okay? Remember, the ECB, the European Central Bank, has a target of an inflation level of 2% or a bit below. Of course, it's attributed to oil prices, but I think it's not only oil prices, of course. We have core inflation also released. Core inflation, we had it last time at 0.9, and no changes expected. So even if you look here at the chart of core inflation, you can see that the last time it was around 2% was back around the financial crisis. It fell to just around 1%, did manage to rise back up to 1.6, but then it fell once again. Recently, it has been rising, but as Draghi said a few months ago, the recovery in core inflation has weakened. So the strengthening has weakened, and it's naturally not a good sign. Okay, we have a question here from Ryan. Besides the risk-off scenario yesterday due to China, yeah, it was not only China, it was also Saudi Arabia and Iran. Do you think the ECB was preventing the euro from dropping in December last year due to the Fed rate hike? So with everyone pricing it in and lack of liquidity, did not see the drop they expected. Now they want to get euro dollar back to what it was before the ECB announcement. Yeah, that's an interesting assumption, an interesting idea. Yes, Mario Draghi may have waited with all the ammunition, okay, for Janet Yellen to act, to see the full impact, to let the Fed do the job and let the ammunition, keep more ammunition, more tools in his shed. That's, of course, we had speculation about that already at the time. I don't agree with this point of view, because we could see that the following day that Draghi was very disappointed. He went to New York after the ECB decision and did some kind of damage control. Okay, he talked about that. Well, talked about that. Explained why reinvesting proceeds was actually bigger, and when he was asked by someone there, I think it was the former governor of the Bank of England, Mervyn King, if what he was doing is trying to fix the market reaction, if he was disappointed, Draghi sort of stuttered and eventually said, yeah. And his face also showed great disappointment. So I think Draghi wanted to have a bigger impact on markets. Yeah, of course, they want a weaker euro dollar, and of course, they would like it to happen without acting. But he did expect that his actions in December would have a bigger impact. Was one of the biggest jumps in euro dollar. It rose 460 pips from bottom to top. So yeah, I think they want a weaker euro because it helps lifts inflation. That's the main goal. Of course, it helps exports, which eventually lifts employment and also inflation. Okay, so I don't think they were intervening to weaken the euro. I do think they were. I do think they want lower levels, but not extremely low. Okay, they want it sort of depressed around 105, maybe even lower, but not. They don't want a sort of worthless euro. Okay, and the end of your question, you opened a long trade, the double bottom yesterday, and noticed very little bull pressure to drive the price back up. Right. I think that with the inflation figures that disappointed yesterday in Germany, and more disappointments expected today, we could see more pressure on the euro. So of course, you never know what's going on there, and it doesn't mean that there's not going to be pressure on the US dollar. One of the last things they didn't mention from yesterday's agenda is the US figure. The US ISM manufacturing PMI was really bad as well. It also missed expectations with 48.2 points, lower than predictions, and below 50 points. In PMI, 50 points is the border between growth and contraction. Okay, so if you actually have a second month in a row of contraction in the manufacturing sector. Okay, it's a small sector in the United States. Services is more important, but still, it's a sector that actually produces stuff. And this was a bad sign. Also, for the NFP on Friday, we had negative, also under 50 in the employment component. Not good news either. So yeah, so maybe the Fed will not hike too much. And something, I forgot to write it here. We had overnight a speech by Williams of the Fed. Let me add it so you can have it on the screen. FOMC's Williams talks about 3 to 5 rate hikes in 20. Hard to talk and to type at the same time. 3 to 5 hikes in 2016, which is of course reflected in the dot plot, but markets don't believe that, especially with the bad figures. So there's also lots of uncertainty about the US economy and the state of the state of the Fed, what the Fed is going to do in 2016. But at the moment, there's a bit more pressure on the euro because of expectations of more action from the ECB because of low inflation. Okay, but remember that the fall in euro dollar is also related to this minimal risk off sentiment. So euro dollar currently 108.08, above support at the round number of 108. Another question from JM. Good morning. How do you see euro AUD and euro CAD? Well, at the moment, euro, of course, risk off sentiment means a weaker. Risk off means a stronger euro. That's what we had yesterday. Why can't I see the chart? Stronger euro and weaker commodity currencies. Now we're seeing a change in this trend. Not something extraordinary, but where did that chart go? Yeah. Okay, let's begin with euro CAD. Here we have oil prices pressuring. Current levels 150.45, support there around 150, resistance 150. Why did I put that resistance line over there? Yeah, oh, for a good reason. Okay, 150, 150 is resistance because it worked as such in mid-December. Higher resistance over here at 153. Okay, so this is the current range. Maybe, yeah, this is a fresh support line, which is also around 150, but it's followed by at 149.50. There's further support for Euro CAD. I believe the pair has room to rise more because of the weakness of the Canadian dollar than because of the strength of the euro. I think oil prices are set to resume their falls, weighing on the Canadian dollar. Of course, there are more factors for Canada, jobs report on Friday. And the euro, yeah, there's pressure on the euro. We might see more pressure today because of inflation numbers, but the euro's fall is limited. So it still attracts safe haven flows. So if we have a fall in the price of oil and the gloomy atmosphere, it's positive for the euro. So I think it could more balance out. Anyway, and Euro Aussie, here the situation is better. Well, you may say quite similar levels, no? It means odd CAD is around parity. Anyway, Euro odd at right around 150. Support a bit below here at 149.50. Further support at 148.30. No, let's put it here. 148.50. Resistance 150, and 153. Here it's a bit more complicated, a bit more mixed, I would say, because the Australian economy is doing better at the moment than the Canadian one. Yes, Australia depends on China, and we had worrying signs about China, but I think the reaction to Chinese data was an overreaction, and the Australian economy does see sort of has more optimistic prospects. So I would be more neutral here on Euro Aussie and more bullish on Euro CAD. Okay. Anyway, the levels here are not exactly the same. 149.50, 148.50. I think this cross is still looking for a new direction at the moment. Okay. Any more questions? Oh, we have to cover events for today. So we talked about Spanish unemployment, German unemployment. At 9:30, we have the second out of 3 PMIs in the United Kingdom. The construction PMI expected at 9:30 GMT. I skipped that because I think the European inflation numbers are more important today. And to answer Jack's question, the pair to watch today is euro dollar because of this figure. PMI. Okay, construction has been the strongest sector in the United Kingdom, perhaps too strong. Perhaps the recovery has been based too much on housing in London, a bubble. If to go maybe too far or maybe not. Anyway, we're expecting here a rise from 55.3 to 56. The biggest PMI is released tomorrow. It's the services one, but this one, the construction PMI, also has an impact on the pound. In general, about these kind of PMIs and in general figures in the UK, sometimes markets front run the release. That means that we might see pound dollar strengthen towards the release on expectations or a leak that the figure will be better. And then when we have a better than expected figure, we can see the pair slide back down. Sort of buy the rumor, sell the fact. The same to the downside, the pair can fall, and then when a bad figure comes out, it can re-strengthen. So watch out for these erratic moves around 15 minutes towards the release. So this is a general comment about UK figures. What else do we have on the agenda today? We talked about Eurozone inflation. We have milk prices in New Zealand, the GDT price index, global dairy trade. Of course, milk is the main export of New Zealand, dairy products in general. There's no set time, but it's usually in the European afternoon. That means around 4 GMT, 3 GMT, 5 GMT, something like that. Okay, we don't have anything really important from the United States today. But during the night, we have Chinese services PMI. It's less important than manufacturing, but should become more important in the upcoming years. Why? China is trying to make a transition from manufacturing, from investment, to more services, more consumption. And let's see how it goes for them. It can have an impact, not on the wider markets probably, but more on the, on the Australian dollar. Okay. Question here from Ryan. If the data from Germany is bad today, then we should break support on euro dollar 107.90. This is quite strong support, which is being a triple bottom. Where is the next support? And we should expect a bounce. Okay, let's examine euro dollar. I put the line at the round number of 108, but yeah, yesterday we had a drop to even lower ground. I see why you're talking about 109. 107.09. Okay, makes sense. Right. Yeah, so the triple bottom you're referring to happened initially here in December, the post-Draghi low. This, of course, this sharp rise up here from 105.20 up to 109.80 is the Draghi disappointment. Then we had a drop. First bottom at 107.90. Second one was a bit above this line at around 108, just after the Fed actually, and now we had it third time's the charm. Okay, the figure from Germany today is unemployment. It can also, of course, disappoint, but it can also surprise. I don't have a specific. I think it's well. It's important, but the more important figure for today is the European inflation figures, because that's what officially, that's what the ECB looks at. Of course, politically for Angela Merkel and the German government and policymakers in Germany, unemployment is important. But let's look at Eurozone inflation. If we were expecting, from the official expectations released last week, of course, I'm expecting a disappointment because of yesterday's German inflation figures and Spain's, but I'm not sure it's fully priced in, especially if we see a negative number on headline inflation, which would be a bigger surprise. Then we could see a fall over there. Okay, and what levels are below, you asked? So 107.60. which I marked here, hasn't been reached in quite some time, but look, it has been the top here in mid-November, okay? So, and in the past, I also think it worked as resistance and support. So that's sort of the immediate line, very, very close. Afterwards, I have here on the chart, what do I have here? Well, levels unseen for quite some time, but 106.70, 106.30 towards the Draghi event, towards the ECB's decision on in early December. 106.30 was really important, so that's another line to watch. And of course 105.30 and 104.60, which was the low in March last year in 2015 and the lowest level in 12 years. Okay, I hope this answers the question. What are European inflation figures that would move euro dollar today? What would be considered a positive and negative surprise? Okay, the official expectations stand on 0.4 in the headline. I would say if we have 0.4 in the headline, it would be a really, really positive surprise, because expectations are lower because of yesterday's German numbers. I would say 0.2 is more rational. If we get 0.1 or below, or 0, or of course negative in headline inflation, then we'll get, I think, a more negative reaction in euro dollar. So I would say the whisper expectations, the real expectations, are closer to 0.2. Okay, and it's also important to watch the core inflation figure, expected to remain at 0.9. And here we don't have really any hints. Okay, so it can go both ways. If it already stood above 1% this year, so a rise to 1% would not be a huge surprise. Yeah, we had it rise to 1.1. So 1.1 would up to 1.1 would not be really positive. Above that would be really good. But we could also see it drop back down to around 0.6. I would not be surprised. So if we have a combination of, let's say, 0.2 in headline inflation and the drop in core inflation, it could also be negative. Okay, so it's a bit confusing because we have two figures, of course, very related but released at the same time, and but I think it can be of importance. Anyway, we have the ECB meeting in 2 weeks' time, around on January 21st. They don't have new staff forecasts. That means they're not expected to announce anything immediately, but they can hint about action in September, especially if inflation figures are weak and the recovery is slowing down. Question from Fabian. So below 0.2 would take euro dollar fall sharply, and above would have a recovery. Yeah, that's my estimate. Of course, I may be right, I may be wrong, but as I said, the official expectations don't reflect the real expectations anymore because of yesterday's figures. So if you see 0.4, that's actually a really positive surprise at the moment. I would say it's around 0.2 and not 0.4. Okay, and of course below 0.2 would be negative. Remember, we're already more than a year after the big fall in oil prices. The big fall in oil prices came in, let's look at oil, came in November. We're expecting to see the base effect, the fall in oil prices, fade away. Okay, so this is the big fall. Of course, we had it around 100 a year and a half ago, and then it began falling. And the big fall is right here in late November. And then we reached some kind of bottom in early January. Okay, since then we had some kind of recovery. Anyway, the excuse of oil prices causing low inflation is expected to fade away. All right, so if we don't have prices rise, despite the fact that year over year oil prices are not that terrible, then Europe, we have a problem. Okay. Any more questions? I'll just say that tomorrow we have we're going to do a shorter version of the normal show, but we're going to do an outlook for 2016. Talk about, I had my topics on the agenda are, just to give you sort of a heads up, what's going on with the US dollar regarding the Fed, the elections in the United States, oil, Eurozone, ECB, and also we're going to touch about fiscal policy, the pound with uncertainty around the Bank of England and the EU referendum, in Japan, also politics and the Bank of Japan, of course. Going to talk about commodity currencies, and if we'll have time, we'll touch also on Saudi Arabia, Brazil, China, stocks and bonds, and of course your questions. I'm going sort of to preview the year. Yeah, so that's going to be tomorrow. More questions? During the show, we're seeing another weakening of euro dollar, just a bit more, not anything huge. And it doesn't go hand in hand with the yen. Okay, so the yen is actually strengthening. Euro isn't. Euro is weakening. So it's more general strengthening of the US dollar also against the pound. Sorry, strengthening of the US dollar against everybody except the yen. It shows that the dollar is strong, and it also shows that the euro is weak. Risk off should have strengthened the yen. Why is it weakened instead? No, the yen has strengthened yesterday quite a lot. Okay, and then we had some stability, some risk on. From the lows, we had the stock markets in the United States recover from the lows. Chinese stock markets stabilize in the open. And now we're seeing sort of a resumption of this gloomy mood. As I said, it's a pause in pessimism, not something really positive. But and for me, the interesting thing to see here is that this return of gloom, which strengthens the yen, does not strengthen the euro. Okay, so the yen is the only currency currently gaining against the US dollar, and the euro is a bit less, it enjoys less, sort of takes less advantage of this gloomy mood because it has its own weaknesses. I think mostly because of inflation figures from Germany and expectations for inflation figures today. Well, you're most welcome, Ryan. Thanks for the kind words. Anyway, yeah, pound dollar also slipping under 147. Any more questions? Just mentioned that the events for the week. Let's just do a quick roundup. Yesterday we had the Chinese Caixin PMI worse than expected. US ISM manufacturing PMI worse than expected. All this gloomy. Today we have milk prices and European inflation numbers. Tomorrow, busy day in the United States, GDP non-farm payrolls and non-manufacturing PMI, both hints for the non-farm payrolls on Friday, and of course on Friday, the NFP and also the Canadian jobs report. Another question from Fabian. To the risk off fading and risk on returning on a short bounce. Yeah, I think it's markets are never a one-way street, never go trend without any pause. I think we had yesterday gloomy mood, then some kind of pause in pessimism yesterday evening, night, and now I think we're seeing a return of this negative atmosphere. At least this, yeah, it's mostly risk off, and it was a temporary risk on, and I think now we're seeing a resumption of this gloomy mood. So euro dollar is not crashing, but it's not recovering, okay? Oil prices are also falling. Yeah, another thing I like to show usually here is this CME Group FedWatch expectations for a rate hike. Yesterday they were a bit higher for March. Nobody is expecting the Fed to raise rates in January. There is no press conference, and it won't be really gradual if they raise rates 2 times in a row at the very beginning of this cycle. Anyway, yesterday we had it around for rates to remain unchanged, it was 42%, and now it's 45% almost. So it's sort of a higher chance that the Fed will not raise rates in March, but nothing really big over there. Okay. Of course, the most important central bank remains the biggest influencer. Any more questions? Or we'll begin with the wrap-up for today. Let's begin. This is the wrap-up for the live market open for January 5th. It's Tuesday. It's the second full day of the year in terms of trading. And we had a small pause in pessimism. Had a bad start to the year with stock markets crashing, safe haven currencies gaining, and commodity currencies and the pound sliding. Then we had some kind of pause in this atmosphere, and then perhaps we're seeing now a resumption of the negative atmosphere. So it's still unstable markets, disappointments all over from the manufacturing sectors in China, the UK, and the US. German inflation missed with only 0.2%. This has made the euro less of a safe haven and weighed on it. So it's mostly the yen gaining in times of trouble, as we're seeing things today. And despite the weak figures in the United States, we had Williams of the San Francisco Fed say that he's still expecting 3 to 5 hikes in 2016. Markets don't really believe that. We're seeing weakening of the euro, currently close to support, around 107.90, 108, awaiting inflation figures. The pound resuming its falls after some stability, currently under 147. 146.10, I would say, support. 148 is resistance. Dollar yen, after recovering thanks to a better atmosphere, it's falling once again. 119.20, 118.20 support, 120 is resistance. Dollar CAD on the rise once again, 140 resistance, 137.87 is support. Watch out for oil prices after tensions subsided around Iran, or about to subside between Iran and Saudi Arabia. The reality hits oil, and it's a slippery reality, and there's no bottom to the barrel at the moment. As I see it, just too much supply and not enough demand. Aussie dollar 72.20 works very nicely as resistance. It's not the strongest line there. 72.80 is stronger. 71.50 is an excellent line as well. We'll release the most predictable currency pairs for Q1 later this week. And 70.50 is the next support line. Kiwi dollar, expecting today the milk auction, sliding now to lower levels, breaking yesterday's lows. 67 is support, 66 further support, resistance at 67.90. Okay, events for today. We had already Spanish unemployment change was okay. German unemployment change, expecting to see good data from Germany regarding the jobs market. UK construction PMI, expecting more or less the same. It's the strongest sector, but not the most important one. Most important one is services tomorrow. Eurozone inflation data, the main event for today. Remember, real expectations are lower than official expectations. Official ones are 0.4. Real ones, I believe, are around 0.2 after yesterday's disappointment. This can be a make or break for the euro. Also look at core inflation. In the afternoon, we have Kiwi for the Kiwi New Zealand milk prices. And we have services PMI from China, as focus more and more on China. Well, for a good reason. China is the world's second largest economy. Okay, so let's see if this pause in pessimism is really over, and if we'll see more gloom and doom, which is positive yen, not really positive euro anymore, and negative for commodity currencies and the pound. Okay, so I guess that's it, but we have more questions. So what time? Your Outlook show, it's the same time as the regular show. It's 8 GMT. I'll just be the regular show will be a bit shorter, and we'll focus on the Outlook. Okay, so it's at the same time. It's just combined with the regular show. Of course, everything is recorded, and you can watch it also afterwards. And a comment from Fabian. Thank you. Hi. I thought that the shift of mood of risk was more long-term, but then it can reverse day by day. Yeah, as I said, it's not. It's a pause in pessimism would be the best headline I can make for what we've seen in the past few hours, but it may be over. Let's take another look. Yeah, look, euro dollar 108.01. Let's see if it breaks this 107.90 level. So far, 108 is the low for today, but yeah, when you see the yen strengthening and other currencies weakening, it's the risk of, it's the gloom, it's the doom. Let's see if we have some data from stock markets. No, not so terrible in Europe, but No, but for currencies, it's a resumption of the falls. Okay, so I guess that's it for today. Thank you very much, everybody, for coming. I'll mention again, tomorrow, the focus of the show will be on the 2016 outlook. And I wish everybody a safe and successful trading day. And we'll be here tomorrow. Thank you and goodbye.